Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and last week has been extremely choppy and volatile, and there is a possibility of this extending for the next maybe about a fortnight, that is 15 to 20 days, unless we have the clarity on the state elections and the outcome. On the global news flow, well, there has been a slight bit of improvement over the weekend, but there still remains a clear and present danger as we get mixed news flows from overseas as far as the geopolitical situation is concerned. On our markets, well, we started off with a little bit of deep red, but as I speak to you this Monday morning, there has been a recovery, and the Sensex trading at about 57,600, down close to about 225 odd points. 17,200 on the Nifty spot, down about 100 points, and the recovery largely that is visible is on the financials, that is Nifty Bank, which is trading about 100 points on the higher side at about 37,700 and above. On the rupee dollar front, significant amount of strength as far as rupee is concerned, 74.45 against the dollar, which was not the case last week and 10 days back. And on the energy basket, we have seen close to $93 per barrel on Brent, $91 per barrel on NYMEX. Remains to be seen how the entire geopolitical situation unfolds in the next couple of days and weeks to come by. Uh, Overall, on the market front, what I have witnessed in the last maybe about a month or 3 months, broadly there is a range on the Nifty spot and so on and so forth for the Sensex, and that range on the lower side is somewhere close to about 16,800 to 17,000 on the Nifty spot, and on the higher side 17,300 to 17,500. Now this is what we've, at least I have witnessed over the last month or 3 months. If you look at the chart of the Nifty, then this is the broad range, and we are oscillating between that depending upon the news flow. And but the good part, friends, is that whenever we've gone closer to 17,000 or below 17,000 on the Nifty spot, there has been recovery, and I hope this continues. But as I mentioned earlier, I think choppiness and volatility is going to be elevated. We are going to see days like we've seen over the last week or 10 days, wherein uh, lower opening, recovery, choppiness throughout the day, and possibly ending up with a mixed bag. But there is some buying coming in at 17,000 or below 17,000 on the Nifty spot. Having said that, friends, I think this year, that is for the calendar year 2022, what I feel is that it is not going to be the year that we've seen that was in 2020 or 2021. I think in the second half we saw recovery in 2020. 2021, we all know how the markets reacted, and the beginning of 2020 has been a little bit on the subdued note with range bound markets, thanks to global as well as local news flow. In effect, what I'm trying to say, friends, is that this is going to be a stock pickers market, at least this year I'm talking about. And you need to be sector specific, and within that sector, I think you need to be stock specific. That's going to be the year 2022. I hope that the second half does see a little bit of news flows on the negative side uh, ebbing off, and positivity as far as the domestic markets are concerned, and news flow from the global arena. Having said that, I think sectorially, what we have identified a couple of sectors. So IT is one of them. Financials and financials both, of course, banking and NBFCs would be the second one. Specialty chemicals, I think, will again hog the limelight post the China plus one, uh, you know, upward move that we saw on specialty chemicals. Then there was a sideways movement. Most of the stocks corrected in this universe, but I think there is pickup expected to come through. So specialty chemicals is the third sector. And fourth one, if I have to highlight, which has been again a very choppy sector, is autos, with the recovery as far as the semiconductor and logistics side supply chain issues are concerned, I think we should possibly see some resolution and in the near future. So these are broadly the four sectors. Of course, then you have FMCG, you have metals, you have cement. Broadly, I think these are some 5 or 6 sectors. Again, like we've been mentioning earlier, uh, large cap and select mid cap should be your focus. One announcement from the government side in terms of green hydrogen is concerned. Of course, this is a little bit of longish kind of an investment idea, but keeping this theme in mind and keeping the requirement for low cost energy in India, two stocks stand up in with this announcement from the government side as far as green hydrogen is concerned. And that is, of course, Reliance Industries Limited and L&T. I think these two companies are well established in terms of taking advantage of this policy. This is not a 1 year, 2 year kind of an investment idea. This is a little bit longish, maybe 3 years, 5 years, because it will take that much of time to set up capacity and then get advantage on the balance sheet. So Reliance Industries and L&T, possibly one can do a SIP, that is SIP, systematic invested plan. Every month, whatever investable amount you have, you can start buying into these stocks with 3 to 5 year plus kind of time horizon. And my sense is that these two companies will be the greatest beneficiary. I don't think markets are going to see a huge sell-off or a meltdown. I think broad range, as I mentioned earlier, should be in place. And if you're looking at investing into the market, then I think start from 17,000 on the Nifty spot, and as we see lower levels, increase your investment percentage and look at the stocks and the sectors that I've mentioned, because I think this calendar year 2022, as I mentioned, is more of a stock pickers market with sector and stock specific approach. Two investment ideas, Reliance Industries and L&T, with green hydrogen theme in mind. Thank you very much for your patience hearing. I'll see you again next week. Take care. Bye bye.